Good afternoon, everyone, and welcome to our YouTube Live, our October Hot Stock panel. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always my pleasure to be here and glad to have you here. And it looks like from the chat, we've got a lot of VV Nation people, as well as our day trading room, or our trading room, our Jockey Club people. If you can hear us, please type in the chat that everything is coming across loud and clear. My producer, Joey, is in the background making sure everything is good to go. Say hi, Joey. I don't know if everybody heard you, but you said it very wimpily. It's all right. I don't have my little soundboard in front of me today. But welcome to our YouTube Live channel. For those of you who may be new to the channel, take a moment right now if you can. If you look down below this video, you should be able to hit the subscribe button. Let's see how many new subscribers we can get to this today, especially if you like the content. And also, if you like what's going on, don't forget to hit the like button as well. Today, we're going to have 7 picks from 3 different people in the panel today. Myself, Steve Chappell will be with us as well. He's our Manager of Systems.
Director of Trading Systems Development.
Thank you, the Director of Trading Systems Development. A good friend of mine, been with VectorVest probably about 19 years. I've been here 16 years. He's a mentor of mine. I value his opinion. I don't always agree with his opinion, but I definitely value his opinion. He's got a lot to offer to VectorVest and to myself. And special guest today, all the way from Ireland. That's a far away. That's not just a drive away, but we have Susan Hayes-Colton, who is the Managing Director for EU. She's an economist over there as well, so she's got a lot of insight as to what goes on in our market, but specifically what's going on in the EU. And she's got, as I mentioned, and to not sound redundant, but I'm going to be redundant, she's extremely knowledgeable about what to do in the software, and she is the host of Fantastic Female Fridays right here on the YouTube channel as well. So there's a lot of great content on our YouTube channel. So that's why I say if you like that kind of content, please subscribe to the channel. The Hot Stock panel is all about every month we find stocks for you to take a look at. And we walk through what goes on with the company, why we like the company, and then more than that, we walk you through good entry and exit points on those companies as well. And if you go back in time, I think a lot of our picks have done very well. I know that some of Steve's picks have done extremely well after the Hot Stock panel. So it's definitely a place to come and get some insight and some knowledge on stocks that you may or may not know about. Let me see, I'm covering everything I got. Oh, we have a giveaway today. Haha, we got a giveaway today. The giveaway today will be for another mug. So at some point now, I might as well do it now. Type mug in the room. All right, here we go. And the chat's gonna flow like nobody's business. Yes, I said business with mugs. So if you type a mug in the room, you're gonna be entered in to get a free VectorVest mug. But if unfortunately you don't win, if you look down below this video, you will see the VectorVest merchandise store. You can purchase your own mug if you do not win yours. So I'm sure that there's the mugs, they're coming across, I'm watching the chat, it's going crazy, and that's fine. You're being entered in for a mug. We'll give it away. The cutoff time for entering mug, the word mug, is at 2:45 this afternoon, and then we'll give it away. All right, so with that, let's start to get into, I know everybody's here for that, let's start to get into what stocks we think are stocks to trade during this election cycle. We all know that we're going through an election cycle. And you know what I ain't gonna talk about? I ain't gonna talk about politics. So don't start typing it in the room because I don't wanna hear it. This is all about stocks, and stocks that you can trade through. A lot of times, election cycles can be very volatile. So we're gonna try to find you some stocks to take advantage of during this most recent upcoming election that's coming up. So you're going to see here on the VectorVest software, we have the 7 stocks that we're going to talk about. Write them down so that you'll have them all. And I think tomorrow in the Jockey Club, Steve, whoever does it, I think we'll put a list of these out there for people in the Jockey Club as well. Talking about the Jockey Club, If you're interested in taking a trial to the VectorVest software, Joey will put a link in the chat for you, especially if you're not a subscriber to the software. It's a super low price. I believe it's 99 cents for 30 days. Take the trial, folks. But you got to click on the link that Joey puts in the chat to take advantage of that. It's www.vectorvest.com/YT, because we are podcastable. So I'm putting that out there for people who are listening by way of podcast, that they can take advantage of it as well. www.vectorvest.com/YT. As in, for me, it'll be Yankee Tango, because I am a Marine, so I'm going to give it to you in phonetics from that perspective. Yankee Tango. And one last thing before I get into the stocks, we do have upcoming in a week or two, the Financial Freedom Summit, 3 days of learning how to utilize the VectorVest software, no matter what type of investor you are. Steve Chappell has a presentation within that summit, that free summit. Susan has a presentation within that summit. And I will be your humble host for the 3 days of the free summit. So I think I've covered everything that I need to get covered prior to us getting into the stocks. All right. So right now you should be looking at the watch list of the stocks that we're going to talk about today. Here are the 7 stocks. My first stock in this list will be WST, West Farm. All right, and there's a lot of good information that I have in regards to the stock. Now, before I get in, let's get into what the stock does. It's a manufacturer in the design and the production of technologically advanced, high-quality integrated containment, as in vials, and delivery systems for injectable medicines. So we all know what's going on with COVID-19. And I like this stock from the standpoint of being in that space without being a company that's got to come up with a vaccine. Think of it from this perspective. When a vaccine does come out, they're going to need needles, right? Or some kind of an injection system. And one of the things that West Farm has is a good guided system to help when they inject, especially for different types of medicines, to get under the skin and guide the needle. I don't think that's going to be especially needed if they stick you in the arm for the vaccine, but it is something that they are working on outside of just the COVID-19. But whoever comes up with a vaccine is going to need these injection systems, and they also are head of the game in their industry for their vials and their lack of getting bad stuff into their vials. They work with a lot of different other companies, and they have partnerships with these companies. So it is a solid company that's been around. Self-injection, I actually can associate with that because I have to take blood for my insulin or for my blood sugar levels. So having that in a more comfortable manner, they've gone out and done a lot of different things in self-injection. And of course, the intradermal delivery, the adapters that are utilized for injecting drugs into your body. They have grown 106% over the last year, even prior to COVID. When I go bring up the stock, we'll take a look at that as well. And a lot of other things. Actually, let's go analyze the stock. We'll start there. WST, it's in the New York Stock Exchange, and it is optionable. And that's important. As I get further into this analysis, that stock being optionable does play a role. Now, one of the things that you'll see is that the stock is trading at $294 with a value of $124. So this is an overvalued stock, which means people are willing to pay a premium to own the stock. It doesn't make it a bad stock. But I think that with them being around as long as they have, and with all of the things that they have in the pipeline as far as products within this industry, is making it enticing for people to get into. And if that many people are getting on board with it, it's going to drive the stock's price higher than the value. As I go and look at the VectorVest software, relative value, which looks at a stock's long-term upside price appreciation potential, as compared to an alternative investment in a AAA corporate bond. What does that mean? Well, you know that when you buy a bond, after it matures, you get your money back with a small interest rate. This relative value indicator helps me to understand, do I want to hold this stock over the next 1 to 3 years or buy into that AAA corporate bond? Well, it's above the value of 1 based or cast on a scale between 0 and 2. So above 1 is favorable. The stock has got more upside as compared to a AAA corporate bond. Relative safety is an indicator of risk. How risky is the stock before you pull the trigger on it? It looks at the consistency and predictability of a company's financial performance. Does this company meet or exceed earnings quarter over quarter, year over year? And if a company consistently meets or exceeds its earnings, they're growing. They're making money, and that's the bottom line for any company that you get into. Relative value and relative safety are our fundamental indicators. We're one of the only companies in this industry, this financial industry, that analyzes stocks on more than just a fundamental basis. We have a technical indicator called RT, also cast on that scale between 0 and 2. Above 1, the stock's in an uptrend. The higher above 1 it is, the faster in an uptrend it is. So we can look at the stock's upside potential, its safety potential, its ability to make money in the market right now or go up in price. An RT of 1.23, the stock is in an uptrend. Before I go look at the graph, I want to look at a couple of other things. The stock is a buy recommendation. They grow their earnings, so not only are they beating earnings, but they grow their earnings at a clip of 18% a year. Double-digit growth of earnings. That's also a very positive sign. Looking over the last 4 quarters, this company has beat earnings 8 cents more than earnings expectations, 10 cents more than earnings expectations, 19 cents more than earnings expectations, and most recently 34 cents over earnings expectations. So not only is the company beating earnings, but they're growing that earnings quarter over quarter and getting stronger and stronger. Now, the stock also pays a dividend, which is important when I looked at that stock. Why? Because if the stock goes down, I know that this is a good long-term stock, but if the stock does succumb to a pullback, what's a good way to stay in that stock long-term without having to get out and get back in? Play options on it. So we noticed that the stock does have options. A good way to protect yourself if the stock's price goes down and sell a covered call. All right, or something along those lines. Buy a protective put, something in that realm. And from their dividend at 64 cents, which is annualized, you need to divide that by 4 to see what they do quarterly. How about they have a dividend safety of 99? That tells me that this company will continue to either maintain its current dividends or grow it. That is on a scale between, what is it, 0 and 99? Is that not correct? Or is it 100? It is 99. They are at the highest realm of dividend safety. So this company is a good, solid company that has gone up nicely over the last year, pays a dividend, is going to be a strong candidate to maintain or grow that dividend. There's a lot that's going on that I love about the stock. And now what I'm going to do, now that I've analyzed the stock, I'm going to go look at the graph of the stock. Let's go find West. There it is. I've got a 1-year graph of the stock. I'm also looking at a 20-period exponential moving average. I like an exponential moving average as opposed to a simple or weighted, my own opinion, okay? I'm also looking at relative timing, which tells me when the stock's in an uptrend and when it's in a downtrend. Notice that over the last year, the stock has spent way more time in an uptrend than not. Now, something that does catch my attention, and this is why those options come into play. The stock's price is currently going up. Today, it's hit a new 1-year high, but I'm watching the move on relative timing trending down, even though it's above the value of 1. Also, I see that the stock most recently was in a channel looking at support and resistance. It broke out of the channel. It had a follow through. What I'm looking at possibly, as far as getting into it, I would buy 12 cents higher than the high because it's a $293 stock to make sure that I'm buying into a rising stock. But the graph tells a story. The stock is definitely moving from the bottom left to the top right over the last year. Earnings per share is growing like nobody's business. Earnings is the engine that drives the stock's price higher. So this does catch my attention about relative timing going down, but I do have a level of a stop sitting at that level of the support, which I cannot see on the graph, and that's fine. But looking at a graph, I've got a finite line of knowing if the stock's price falls below it, that's probably a good time to no longer own the stock, or use that level of support as a bouncing mechanism to say every time, 1, 2, 3 times it's hit that level of support, it has bounced back up, came to a level of support, resistance recently, but most recently broke out. I think that as we get closer to a vaccine, this is a company that will be looked at as a methodology of getting the vaccine from the vial into a body. So that's what I'm looking at from an entry perspective. I like the graph, 12 cents higher than the high. Unfortunately, if it does pull back, you have a finite line, I think, of support. But if it breaks down below that support while owning it, you probably want to get out of the stock then. But if it does pull back, you can play options like either a covered call or buying a protective put to protect you against this good long-term play. All right, that's all I got. Steve, any insight?
Yeah, sure thing. I mean, first of all, I do like the pick. I think it's a solid pick here overall. I'm going to take COVID out of the situation because I think we rightly can do that. If you look at the earnings and earnings trajectory on the chart, it's very, very strong. So they're doing well, you know, with or without whatever might happen over the next year, or may not happen over the next year. I love breakouts. I've been trading a lot of them here over the course of the past couple of weeks. This is a breakout candidate as it's breaking through resistance, as you pointed out. I like the idea of buying it as it continues to rise with the buy stop order above the high. I love everything that you said there. One thing, well, two, I've already mentioned the strong fundamentals, which is terrific for investors. So this is suitable for investors. It's also suitable for traders. And I would say this, the height of the channel is generally the expected short-term return on the breakout. So I'm not sure, you said you had trouble reading the numbers. I think it's about 20 points.
Let's see if I can make this better. Still no, but I can't see. But yeah, I'm going to say somewhere.
Use the date line and go to the.
Oh, I could do that.
Go to the low and then go to the high. Back 2 bars. There you go.
9.4. The low is 254.
All right, and then nope, and then go to the. Yep.
And the high that day was 287, so 254 to 287.
Yeah, so you got 30, roughly, we'll call it 30, okay? We'll call it 30 points of expected move here over the short term, actually, is fairly attractive. Susan.
Well, a couple of things that stand out to me here is particularly when you make the point about you, and I quote, earnings are growing like nobody's business. So I just while you were talking there, Glenn, I took a look in at the 2020 proxy statement. So I just said I was going to go in and take a look around at the actual set of accounts, and a couple of things, or 3 things in particular, stand out to me. The first one is that it has a full year 2019 operating cash flow of 367 million. While that's a lovely number, I mean, to put it in context, that is a 27% increase on the year before. And this is in anticipation of, as you mentioned, if there's a COVID vaccine, etc. But as well as that, you know, you mentioned about the self-injection and so on, is that my dad has diabetes now. He takes tablets, but the point I'm making here is that this isn't something that people choose not to necessarily do. So there's going to be a high retention in terms of its customer base. So when we see an increase of operating cash flow of 27%, we are dealing with a defensive stock, and I think that that's very important to mention. However, the second thing that I wanted to bring up here is, of the operating cash flow, 126.4 million was actually put back into capital expenditure. So this company isn't sitting on its laurels, it's also reinvesting as well. It's putting half of that operating cash flow is being put into capital expenditure. And the third thing, and this really jumps out at me, particularly when you're talking about the growth of earnings, and when you're looking at that lovely graph there from the bottom left to the top right hand corner of the earnings per share, is that the gross profit margin was 32.9%. That means for every dollar that is coming into the company, a third of it is still there after the cost of sales. So I think that that's really, really important. It's an important point to mention. 2 other points that jumped out at me actually as well is that when we take a look at stocks today, all right across the database, whether you look at our own one in Europe or whether you look in the US, it's very difficult to find high CI stocks. But this is one. You might just click on the CI, the comfort index there, please. Anybody who has met me before, either digitally or in person, will know I'm a big fan of the comfort index. And in essence, the comfort index is a stock's ability to withstand severe or lengthy price declines. Or another way of putting this is it's a beautiful way to find stocks that start at the bottom left-hand corner and move to the top right-hand corner. Glenn also mentioned about using options there. Now you can see the CI there. See the way the CI, even right, if you come right up to today, Glenn, right up to today, CI is at 1.72. That's very, very high, very high. It's very high anyway, but it's also very high relative to all the volatility we've seen this year. But high CI stocks are really great for options when it comes to, again, whether it's selling your, pretty far out in terms of price and close in the month to cover calls, or if you're selling short puts. The last thing I'm going to mention, if it's okay here, Glenn, is can I ask you to put on GPE? I was particularly struck by this. So GPE, just again, while Glenn is putting this on, GPE is growth to the PE ratio. So this is, well, how are the earnings growing? But if we divide by the PE ratio, it is how can we find fast growing earnings that are available at a relatively decent valuation. The GPE at 0.26 is very low. So therefore, what we can see here is that we've got a healthy figure, and we've got one that really stands out. We've got a healthy CI here. We've got a really healthy moat for any of you who are Buffett fans, from a profitability point of view. So certainly, I think everything that Steve said, I agree with as regards being a trade. But certainly, in terms of a long-term investment point of view, there's a lot that's good, and that's going on here as well. Then, well done.
Excellent. Well, thank you for that. And I want you at all of my panels. You make me feel good about all my picks. Steve does as well. But I from an economist standpoint, I love that, because a lot of the stuff that you just talked about was not things that I was thinking about. And I like that insight from that whole perspective worked out well. So thank you for that. All right, let's go look at the second stock. And my second stock was clean energy. All right, so let me break down why I like clean energy. On this channel, we also do Trending Thursday. Every Thursday we talk about stocks that are making the news. I want to tell you in regards to clean energy, we were talking about it back in July 9th of 2020. I went back through my notes to see when we started talking about clean energy. Why did it come up in my analysis? Well, I did a 10-day price delta on industries on 7/9 of 2020. Okay, that industry was up 12.16% in 10 days. 10 days, 2 trading weeks. All right. It was the second fastest moving industry at that time. It was number 26 on the list of 221 industries. So at that point in time, I said, wow, this is moving. Let's take a look at it. We started looking at it on that date, and ever since then, clean energy has been moving. The price of the industry on that date was $18.45. As of today, it is trading, the industry is trading at $31.09. The industry has gone up tremendously in regards, it's doubled, 1845, 31, no, it's less than double. 18 would be 36. It's gone up a lot. All right, I looked at the last 13 weeks of the industry on a weekly graph. 13 weeks, I've had 3 down weeks on that industry. This is a strong industry. As of today, it is up. I did the same search, the 10-day delta on industries. As of today, this industry is up 30% in the last 10 days, and it's the number 4 industry in our database. This is a strong industry. Side note, just so that you know, and this is the power of the software, if you do not have a trial, this is why you should consider taking a trial. Side note, mining uranium is up 32% over the last 10 days. It's number 185 on 221 in our industries. I'm not telling you it's the next clean energy, but it is something that the software is bringing to the forefront as a mover as of right now. So that's why I like this industry, and I decided in this time for the presidential cycle to take the whole industry. Instead of looking for one stock in particular, why not take advantage of the whole industry? And that's why I'm looking at ICLM. Because it is an ETF that tracks the entire industry, the price and the value will remain the same, and on our proprietary indicators, RV and RS will remain the same. But what catches my attention, relative timing on that industry is up at 1.53. It is a fast moving industry. All right, so if I right click, let's go up to the graphs. Let's go up to iClean. There's the stock on a 1-year graph. All right, now what's really taking center stage in this industry tends to be the electric vehicles. If you've noticed on Trending Thursday, I've talked a lot, not only about clean energy, but all of the stories related behind electric vehicles, where Tesla is the big boy. And everybody's going after Tesla. So a lot of companies, I've talked about IPOs of some of these companies that are coming into this space because it is a viable, hot space. All right, looking over the last year, again with my 20-day exponential moving average, spent more time above it, hitting a new 1-year high today. Look at the 1, 2, 3, 4, 5, 6, 7, 8 days. Out of the last 8 days, only down 1. And even that down day was an open candle where the price started at the bottom of the candle and went back up, definitely pulling higher. Now, point can come into and it was brought to my attention, that the stock looks kind of parabolic. That's fine. So let's talk about that. From an entry point, I'd like getting in. This is a $20 stock, 12 cents higher than the high. But you know what I have as a good point of getting out or egress? How about that 20-day exponential moving average? It's serving as a beautiful support line as the stock's price is going up. Now, you notice here it rode that line, but never really fully closed below it. Actually, unless I make that line a little thinner than what it is, it might show that. But what did the stock do? The stock consolidated during this time period. If I put on support and resistance, it probably sat in a little bit of a channel and then broke out, and look at the stock's price run. I love that RT is clearly above 1. Not only is the stock price going up, but it's doing so on above average volume. That's huge because volume is conviction. So not only is the stock's price going up, it's doing so on good volume. I would pay attention to the nice, steady, steep upturn as opposed to back here where the upturn was more gradual. The upturn here is more steep, but I like using the 20-day exponential moving average as a good point of egress because it's serving as a good level of support. I like the industry. I've been liking the industry for the last 3 months. I'm going to keep on liking the industry until I don't like it anymore. But I'll let you know when I don't like it anymore. But right now, I like it, and I love that here on YouTube, we got you guys interested in it 3 months ago. So that's where I stand as far as the clean energy spot right now. Steve?
Yeah, so I better have good things to say about clean energy. We own 13 clean energy stocks in the Jockey Club right now. And 10 of them are from the trading system that I designed. So yeah, clean energy is huge. I think it runs all the way up to the election. I would definitely have my ear to the train tracks come election time. There might be some selling heading in based on uncertainty of outcomes. And those uncertainties could go on for quite a while. I don't want to, again, we're not going to get political, but we may not have a decided outcome of that election for quite some time. So, you know, long story short, I think short term, this trend could very well persist, quite honestly. The thing that, you know, if I'm going to play devil's advocate a bit, because I think we should in certain situations, there are stocks making wild moves on, you know, nothing more than just articles that are being put out to the masses. And what I mean by that, if anybody saw the stock last week, I think it was PSI.
PPSI?
Or no, I think it's PSI.
Okay.
It went from what, $5 to $60 on news that they might produce an electric vehicle in a couple of years. You know, and so there are, just to point out, there are stocks in this space that are making wild moves. And I think that has something to do with what you see on this graphic right now, okay? They're making wild moves without any real financial backdrop to rely on. So, you know, I would say this. get in there while it's hot. We're trading the heck out of this sucker right now, you know, but just kind of have one foot out the door mentality because, you know, it is parabolic, it will pull back. So you're kind of due for another one of those 1 week out of the 13. You might very well run into that situation only to see it resurge on the backside of that, you know? So, you know, I realize this might sound like I'm talking in circles a little bit. This is a space where you need to have some exposure right now, period. The question is how much at this point? The easy money, that was a week ago. You know, so I think starting small might make some sense here. And what I would look to do maybe, Glenn, just to build on what you've said, I would look to buy it just as you said, but maybe start small. When you pull back to the 20 average, which, oh, by the way, may happen, okay, because it does, right? It's happened 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times in the last 6 months, right? That's when I would look to add back to this position, not as it's falling to meet, but as it starts to bounce and rebound back up from, okay? And if Democrats take full control of government, in other words, if you have House, Senate, President, clean energy is going to be big for years to come. You want some exposure to this space. I took too much time. I'm sending it over to Susan.
Right. Well, I think that this area has been talked about so much over the years, but it's often been talked about in, you know, feeling the love and kind of been in fluffy terms. And I'm just really interested in how this conversation has been moving forward, because we have gone from an environmental angle, which is, yes, we should all be doing this. We should be doing this. We should have been doing this yesterday. But I remember writing an article back in 2014 just about that. Does your money lie where your values lie? In other words, does it actually make financial sense to invest in green energy? And back then, I have to say, it really didn't. Whereas let's look at what's changed since. Okay, so number one is the ESG whole area. The ESG trend, investing in stocks that have good environmental, social and governance metrics, that is something that has changed. And there was a comment recently on CNBC, which basically said that this was the year that the ESG theme has particularly, you know, made its mark, and it's the year that it's really taking to the fore in the US, whereas it's been like that in Europe now for quite some time. In my views last year, I wrote about when the first ever ESG fund ETF had actually passed over 1 billion assets under management. That happened in Europe as opposed to the US. The fact that it's taking place in Europe now is really, really driving that forward. The second thing that we always have to be concerned about, and here I suppose, here's where I'm going to play a bit of a devil's advocate, is that does it actually do green energy companies actually make money, right? Now let's leave Tesla alone, right? Apart from that, does it actually make money? And to a large degree, it hasn't. And that's why a lot of the green energy ETFs of the past didn't make any money, because the companies that comprise them didn't make any money. But you do now have to say, now we're dealing with really, really, really big buyers. We're dealing with massive buyers. Actually, just today, yesterday, it was published that there's going to be £160 million made available to upgrade ports and infrastructure across communities in Northern England. It's going to see that's going to see the basis of 2,000 construction jobs created rapidly, and will enable the sector to support up to 60,000 jobs directly and indirectly by 2020. That's what's happening in the UK. If you take a look at what happened in the stimulus budget that was announced post-COVID in the case of the EU, a whole third, 1/3 of the entire amount of money, that was over €1 trillion agreed, 1/3 was due to be spent on cutting carbon emissions. And so therefore we can see that there's massive buyers, really, really big buyers in the audience, or in driving this. The other thing as well we have to talk about that's different today than a couple of years ago is the next demographic. When you take a look at Gen Z, right? So Gen Z are the people that are making a huge impact today, massive impact today in our environment, literally in our environment. These are the people, Gen Z would be people who were born from around about 2005 onwards, right? So if you look from that point onwards, that's what I'm talking about. These are the people who are going to march for the environment. These are the people who are conscious consumers. So they are voting with their pockets, and they're voting with the Twitter accounts and their Snapchats and their Instagram lives. They're empowered, and they're actually pushing companies now to question what about the sustainability of our supply chain and so on. So I think for all of those reasons, I think that it is a really interesting prospect. But I would definitely say, when it comes to green energy, we do need to make sure that the companies that are making waves, as Steve said, in this space, the companies that are making waves, we have to make sure, are they also making profit? Because at the same time, as you've heard both of those guys, both Glenn and Steve, say several times, is that money goes where money grows, and that has to be at the core of when you're combining this. Otherwise, you can leave it to the government to invest.
All right, so thank you for that, Susan. Joey, did you say something? Okay, I thought Joey whined and said something. I don't know. It sounded like I thought Anyway, so with that concludes my two stocks. I am now going to turn it over to Steve Chappell. We're going to go back to the viewers. Turn it over to Steve Chappell, and Steve is going to first introduce himself and tell you a little about himself, and then we're going to get into his stocks. Take it away, Steve.
All right, perfect. So nice segue into this next segment there, Susan. We're going to build on what you said there. But again, my name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest. Delighted to be on this panel. Two of my favorite people at VectorVest in the same panel. Yeah, I'm excited to be here. So yeah, let's get right to the two stocks. Yeah, I've been here since Moses parted the sea.
Since the Grand Canyon was a crack in the ground. That's how long we've been here.
Yeah. All right, so we don't need to go into all that. Yeah, let's get right to the stocks, guys. So just to kind of build up on what Susan was just saying there, you know, we want real profits, right? And so actually the clean energy space is more than just electric cars. There's lots of different options to choose from out there. I'm going to pick on one here that really shines in VectorVest. It's called Renewable Energy. This is the name of the company. And boy, what a great name for this day and age as well. But they deal in replaceable of fossil fuels, okay? So it's an industry that actually, or it's a company rather, that actually could really do well no matter what the outcome of this election happens to be. When we look at the price, it's currently trading $59, valuation is 73. Okay, so it's undervalued. I like that. I know right away, by way of VectorVest, who I trust with my life at this point, that's why I've been here 19 years, you know, I know that I'm getting a good and fair price. In fact, I'm getting an undervalued stock that has, you know, all the means to be $73 a share right now as we speak. Then as we slide across the data to RV, that gives me an idea of what the upside potential is and what it truly is. And what I mean by that is, you know, I'm far better off buying this stock than putting my money in a safe investment like a AAA bond. I should outperform that AAA bond by 48% over the next 1 to 3 year time horizon, which is terrific. Odds are, I think it probably excels even better than that. One of the things that's great, not only is this a company that is making money, and I know that actually by the RV score, you can't get a high RV unless you have really two things: real profits and strong growth. So maybe before we get to the safety component, let's scroll to the right. The growth rate is 21% a year, and they're already making actually $5 a share. So even if you did something as simple as a PE analysis on this stock, you're getting an exceptional value. You're running a PE on a forward basis of just north of $10 a share, which among the industry, you know, is clearly going to be a leader. As we scroll back, the next thing that I want to know as an investor is I understand the stock is safe, it's undervalued, it's rising in price, but how consistently do they turn those profits? Well, the story gets even better. So when we get to the relative safety component, the RS, it's above 1. So I know immediately that this company, it's not something that just happened. It's been happening for a while. You can't get to a relative safety rating of 1.3 unless you've been growing your quarterly profits quarter after quarter after quarter, year after year after year. That's how you get to a 1.3. 1.4, by the way, is considered excellent, and you're in blue chip type caliber at that stage, okay? So might be interesting to some folks is, hey, we're talking about a clean energy stock here that's nearly a blue chip, okay? When we look at the relative timing, it is on fire like nobody's business. Now, it's not as hot. You know, quite frankly, my two favorite stocks in the entire clean energy space, one is Enphase. We talked about that one last July, 2 Julys ago. Nope, 2 Julys ago, and it was trading at $30.45. Now it's $105 a share, and it's not done, okay? Then you have Jinko Solar, which is probably the hottest stock in the whole space right now, and I really think that's another good one. Those are my two favorites. This is chopped liver here. This is number 3. But, you know, it's safer. It's safer. It's been more reliable over time. It's got more of a proven track record, and it's got a lot more earnings power. So those are all the reasons why I chose this stock. Safe, undervalued, rising in price, very predictable, very consistent earnings. Let's look at it on a chart. All right, so here it is. We can just go down to 3 months. But you can, boy, did you see that earnings down there at the bottom on that prior chart? My goodness. So this just hasn't been happening for the last 3 months, right? Here's what I like, just a few things real quick. This stock is not too parabolic. There are a lot of stocks in the industry that are super parabolic right now, like the Jinko Solar that I just mentioned. I think it's moving up at a nice, reasonable pace. It's undervalued, you know, and that value is continuing to climb. You can see that green line up top continuing to climb. You know, generally, that's going to be a result of increased earnings out into the future. So that bottom graphic where Glenn has his mouse right now, that's your earnings per share. Earnings per share in VectorVest is on a forecasted basis, okay? So we take into account a lot of trailing data up to 12 years, but we also then put a lot of emphasis on where earnings are going. So we look at the end of this year and the end of next year. So we take sort of those 3 main components, we extrapolate all that data into a forward-looking projection. It's a 1-year projection. So when you see that blue area graph rising, it's not that earnings are rising right now, while they are, but it's more that earnings are rising a year into the future. That's a window into the future. You're not looking in the rear view mirror or looking at what's happening today. You're looking at what's coming down the pipe, okay? So all of that leads me to believe it's a good, solid pick. I like this anything from short to long term for all the reasons mentioned, just like yours with West Pharmaceutical?
West Pharmaceutical.
Yeah. So similar story here. I mean, I like it really on both fronts. If I'm going to buy it right now, I buy it above the high today. Okay. If not, same. It's always the same for me, guys. And if you've been watching these hot stock picking panels, it rarely ever changes. I'm either going to buy as it continues to rise, or I'm going to wait for it to pull back, because it will, to that 20-period moving average. And when it does, and when it does the kiss, all I need is higher stock price the following day, or if it takes 3 days or whatever. As long as it snugs there, starts to move up, that's really your best buying opportunity, because, you know, the move is just beginning when you get in on those. So you can treat it a couple of different ways. If I buy it tomorrow, I start small, wait for the pullback, buy more. Glenn.
I like the stock. I'm biased to that industry. There's no ifs, ands, or buts about it. I'm biased to the industry, and this is a good stock. I actually put this on a 1-year graph.
You and I are. I shouldn't speak for Susan. I haven't talked to Susan.
Oh, don't worry. Susan is well able to talk for herself.
I know.
That's
awesome.
okay. I'm going to come back to you. We're all good. We're all on the same page on this one.
I love the earnings per share, and look at the big bump up in earnings. And as Steve says, it is a window to the future. It's forecasted. And as that bump happens, look at the anticipation of the stock's price. That is a beautiful big stairs. That's a lot of stairs. It's just going up. That is climbing the stairway to profits.
I thought you were going to say
No.
I'm going to say heaven.
I couldn't, but I didn't want to step on nobody's toes. Got some
That is
people,
the stairway to heaven,
that is,
Glenn.
listen, I got people that are flaky that way. Yes, I said it. So it's really climbing the stairway to profits. I love the pick. He's one of the only ones in here, I know, especially as far as my stocks are, that is undervalued. That's hard to come by in this day and age right now, for the most part. So a good, solid stock, moving up, undervalued, hot industry. I don't know what more you can say about it. That's a beautiful pick.
Oh, I bet Susan has a couple of things
Oh,
to say.
Susan, I'm looking at the face. I'm looking at the face coming, guys. Come on, get to me. Is it my turn yet? Is it my turn yet?
Kick it to Susan.
Oh, jeez. God, we're beginning to see each other so much on the camera now that you're reading my facial thoughts all at the same time. Well, here's where I'm going to go back to. I'm going to go back to a little bit of my point about earlier is, is this area profitable? And I mean, certainly, for sure, Steve. I mean, this stock has shown so, and I think certainly there kind of is a whole putting together now of all the terms that's out there, like, whether it's green energy, whether it's environmental stocks, or whether it's electric cars, we can put them all together, but they do deserve to be taken apart. And particularly when it comes to renewable energy, I think it's important to look at what underpins this. And the second question is it scalable? And of course it's scalable because green energy is abundant. That's why it's called renewable. It's abundant, and to a large degree the sun shines and the wind blows for free. It does a little bit more of the wind bit in Ireland, and certainly the rain bit, than it does the sun sometimes. But certainly we know that that's for free. So it was just interesting. I took a look around for some analysis on this, and based on the investment of $100 billion, wind and solar projects will produce 3 to 4 times more useful energy at the wheels than oil will at $60 a barrel for diesel-powered vehicles. Now, in comparison, for petrol cars, the ratio is even less favourable, where the renewable investment will produce 6 to 7 times more energy. So the point here is that if you can get this right, at certain prices of oil, that the economics of this, when it comes to the per transaction basis, really does change. So then, of course, we have seen a dramatic fall in oil prices over the summer, and now we're watching this all the time since, particularly how it affects airlines and so on. And all the time, the reason I'm bringing up this when it comes to renewable energy is that is the main competitor. It's always been the adage, like, why would you put the time and effort into taking green energy and renewable energy and the huge investment, like I told you, all of the money that governments are spending and so on, when the oil price is so low? In essence, you've got a theory of opportunity cost here. But the economics are turning now because there's been so much money put into this area. And of course, we know that it gets harder and harder, more expensive, more politically expensive for sure. It also gets more environmentally expensive to drill deeper and deeper for oil. But the other thing is, of course, is that oil itself is a renewable, or is a non-renewable source. So actually now, based on all of what has happened around this, is that for the first time ever, there is a competing energy source now, which is green energy, short-run marginal cost of zero, now with all this investment put in place. And it can replace up to almost 40% of global oil demand once it has the necessary scale. And that's the tipping point that's changed. So I think, I won't go into any of the stock analysis elements because, Steve, you've done a great job of that. So there's no need for me to go into that. But what I will say is, it has a bit of a shade of what I was saying just around Glenn stock there, is that things have changed when it comes to green energy, from the demographic changes and the environmental changes, and where governments are getting behind it and putting money in there, to the point of where it's now like sandbags are now kind of topping up the river, and now we see a big change tipping over here. So I think it's a great sector, and I think it's one we'll be talking about for years and years and decades to come. So yeah, I really like this stock. It's one that I'll be watching out myself and for future.
Interesting. I want to touch on that point of green energy has been around for a while, but it's been stymied a lot for a while. Why? Because oil was the predominant player. And right now, oil is under a whole lot of pressure. We've already talked about this on Trending Thursday, Susan. The demographics behind oil. People are not working. A lot of people are working from home now. So people are not driving to and from work anymore. Oil and the Saudis and the Americans and everybody's trying to come to the table to try to bolster oil back up, at least to some semblance of where it was before. But the demand is not there. We had an oversupply of oil for a while. Oil was sitting in the water. all right, on boats. And, you know, in Trending Thursday, I talked about week after week after week. What moves oil? Demand. And then when oil contracts dropped below, way below dollar, you know, below zero, and then people went out and bought it. And I stepped back and still said, go ahead. I'm not going to tell you not to buy it, but that was actually a buying opportunity of a lifetime. But now you got it, now what? All right, so, I mean, that was a short-term play because of what happened with the futures contracts. But on Trending Thursday, I've been saying there's no demand. The demand is not there. And now Season's talking about governments are now putting more money into it. Activists are now pushing more towards the renewable energy. Now it's a bigger boy at the table, whereas before it was just a little brother. Hey, little brother, can I come up to the table? Can I play? No, go away. Big Oil is the guy. They said, okay. Now Big Oil is going, well, come on to the table. And that's where we are right now. And it is a difference in the paradigm. I really wanted to say paradigm, but the paradigm has changed. And now is, you know, this was a speculative play a long time ago. Now it becomes a real player in the game of energy as far as renewable energy. So I wanted to put that out there as well. The paradigm has changed, and now getting you into it, or at least looking at it, I think, just think about it. If you're not into it, if you believe in it, whatever. But at least we're putting it out there for you to consider. All right, let's go back to the viewers. I'm ready for your seconds. Why you look at me like that?
Oh, no, nothing.
You give me a Steve look.
I'm thinking about what Ray's thinking about right now. Like, I put Chappell on this panel, and he talks a lot, but he's got nothing on these two guys. I mean, we might be here till 5 o'clock.
Wow. Hey, let's get to your next.
Okay. All right. So, yeah, a little comedy relief there, I guess. All right, so next stock. I think that, you know, this is, well, if you grew up in my era, this is cheat mode right here. In times of uncertainty and uncertain outcomes that may be prolonged and you know, recovery or lack thereof, or, you know, everything that we're confronted with today, really. There is a certain segment of stocks that just always tends to thrive. And one of those stocks is Dollar General. So we're going to talk about Dollar General. Dollar General, you've probably got one within 2 blocks of anywhere you live. There's probably more on the way. But anyway, Dollar General is tracking $214 right now. It is, believe it or not, undervalued. Value's coming in at $279. Earnings has really been rocketing, I think, here as of late, as far as they're concerned. So I guess I'm not that surprised to find that it's undervalued. When we look at relative value, it does have a higher score. And, you know, while they're still making the same 21% a year on a growth rate basis, they have a much larger nest egg of earnings that they're sitting on. So almost twice the earnings power of renewable energy. Just, you know, if you look at the EPS number out there on a forward basis, you're looking at 913 compared to 546. So it's, you know, they're growing. They have a lot. They're growing it just as fast and even more reliably. If you look at the safety rating, it comes in at 1.4, which is that blue chip category. Okay, so, you know, this is a staple. It's probably not news to anyone, although I'll be honest, from time to time you do forget about stocks like this, because when you're in a rabid bull market, these stocks don't do, you know, Dollar General doesn't do very much. And in a lot of cases, it might even go down because it's the last thing that you're thinking about buying. But in times like this, where people are still worried about, can I put food on the table, you know, and things of that nature, this is where you go. I mean, out where I live in the country, I'm fortunate to have some beautiful land out in the country. So this is where everybody goes. Anyway, but, you know, so they're everywhere. Who cares about any of that stuff? What I care about is what VectorVest says, you know. I think I like a good story just as much as everybody else, but what I care about is, what does VectorVest say, right? It's got tremendous upside potential, one of the highest scores with RV in the database. I mean, there are a lot of stocks higher, but it's up there, okay? The safety rating is going to be among the cream of the crop. The relative timing, this isn't a stock that's going to go up 30% in a week, right? Like a clean energy stock. It's just not, okay? But if there's a stock that is sure as shooting gonna go higher when we're still dealing with uncertainty a month, maybe 2, maybe 3 months from now, this would be it, you know? And so that's why I would pick this one. If we look at a chart, you'll see what I mean. It's just a steady climber, guys. You know, it's going to get hit like, you know, if we have a COVID collapse situation, it's going to get hit like any other stock does, because, you know, the fear there is, well, are people going to be able to make it to the supermarket, to the supermarket to get staples, you know, those kinds of things. But in any other ordinary circumstance, you know, the bottom is really what should drive the picture here with the earnings per share. We thought Reggie looked good. You know, this is even more dramatic and more consistent. What you love here are the big spikes in that earnings that are coming in on a consistent basis. That usually, guys, is a factor of earnings announcements and what the company has to say about what the future holds, okay? So that's when the aggregate consensus analysts out there are aggressively raising their forward targets. Thus, in VectorVest, we look at the trail, but we also look at those forecasts, and it gives us a great sense on where it's truly going to be in the future, okay? Dramatic improvement there. In my experience, that only leads to higher stock price. And the great news here, there are some dramatic pops in that earnings down there. I think you could actually see some pretty aggressive movement on Dollar General over the coming year, which is even in a stock that doesn't typically do that. That's what that tells me, and I'll pass it on to you guys. I think you can buy this one right now.
I agree with that. It's just coming off of a new 1-year high, but still moving up. Couple of things. One, my wife and I just went on vacation. We went to Pigeon Forge. We drove from North Carolina to Tennessee. Good Gordon Gin, did I see a freaking Dollar General in the middle of nowhere, right next to a cemetery, or right in between an old shed in somebody's auto repair shop. But everywhere you look, there's a Dollar General, number one. Number two, when COVID hit, a lot of people lost jobs, right? Money was tight. Dollar General is a good place to go and still buy, as Steve said, some of the staples, but at lower prices. All right? You're probably going to find a lot of this stuff a little less than going to Walmart, than going to Walmart or going to somewhere like that. Now, they don't have food, you know, so you still have to go to Food Lion or to the Teeter or to, you know, Ingles or all of that stuff. But for all the paper goods and all that stuff that you can have. And you know something, what else? The more you look at Dollar General, the more stuff keeps coming into it. You know, and they keep trying to accommodate the people in these rural towns that don't want to drive so far to go to a big store. And you know, and it's everywhere you look. You see that big yellow and black sign, Dollar General, everywhere. So you sit back and you say, how's the stock $20 to $14? Look at how many stores they got, and they're making money. They're just making money. It's like printing money. All right, so that's the way I look at it. Susan.
Well, I'd like to first of all say I have learned another two statements tonight. One is good Gordon Jan, and the other one is as sure as shooting. And I have made a note of both of those to add to the VectorVest lexicon that I have to go off and Google. Steve Chappell was the guy that taught me a whole another ball of wax. I've learned that one over the years, and of course we all know there's a gazillion Glenisms. So just hashtag just saying, right? Right, when it comes to this stock, it's not a company that I would see as I'm driving by anywhere in Ireland. So I did, but obviously the minute that you hear the name, you get a good sense of what it was all about. And you know what really strikes me? I'd be interested to hear the audience's reaction on this. Is that so far, if you listen to all of us, but primarily all four of the stocks that have been put forward, they're all defensive. They're actually all defensive. They're all stocks that aren't necessarily going to move if the economy goes really high or really low. But this one is the most actually anti-cyclical of all, because just exactly as both the guys just said there, if people are worried about either their existing income or their future income. They are going to do something where they may be concerned about this, and then they'll decide to buy in shops like Dollar General, maybe where they might buy elsewhere. Now, I was particularly struck, and I'm particularly by when I looked at, if it's okay there to just take a look at the GRT.
Yeah.
If we put there, please. GRT on. GRT at 21. I mean, to be such a, like Glenn there talks about a stock that just keeps on printing money. My own description of this, when I was discussing Walmart years ago, was boringly profitable. It just keeps on going. But imagine to be boringly profitable or just keep on printing money, and yet you have a growth rate there of 21%. So I went in and I just did a little bit of digging on this stock, and I went and I took a look at the quarterly earnings, and there's three numbers jump out at me that underpin this, right? Number one is that it's net sales. Net sales means sales minus refunds, grew by a quarter in the second quarter of 2020 relative to the year before. Now, if that doesn't back up exactly what Steve said, like nothing does, is that sales in those right across, and that it grew to 8.7 billion from 7 billion. The second number that particularly struck me was same store sales increased by 18.8%. So when you actually look at why that was, it's that when people were going to the store, they were actually spending more. Now, just take into account there what Glenn said, which is that the more that you buy or the more that you browse in there, whether if it's online, the more that Dollar General actually gets to know you and your preferences. So what they have been extremely cleverly doing is using COVID to their own advantage. And I think that when you look at what both of Glenn and Steve have just said, when you look at what's underpinning that, and then you think about, well, how likely is that to continue? The answer is there's an awful lot that Dollar General are doing in order to make that continue. And speaking of continuity, we didn't take a look at the dividend, but I do just want to make the point about the dividend. If you just pull up the dividend amount and the dividend yield there, Glenn, that would be great, please. So the dividend amount and the dividend yield in particular, right? So I just want to talk to you about this for a moment. So again, you're dealing with a very defensive stock, a stock that is producing, and if we were to go and look at the amount of cash this company is producing, it's really, really high. But yeah, okay, perfect. So here we go. We've got a dividend yield of 67%, but the actual dividend itself is $1.44. Now, anybody who is an income-focused investor, as you will soon learn that I am, will obviously want to know how sticky is that. Can it remain? And I was interested to see that 691 million was returned to shareholders through share purchases and cash dividends. Now, it's a lot of money, isn't it? I mean, it's nearly 700 million, therefore it's nearly 0.7 of a billion, right? In comparison, the cash flows from the operations will actually increase by 157% up to 2.9 billion. So is that dividend safe? Is it what? It really is, because the company is producing huge amounts of cash. One very last point I'm going to make on this is when you take a look, if we just put on the dividend safety there, you'll be able to see that anyway. Let's see where it is. It's at 97. I mean, in comparison, your first stock, West Farm, am I right that, Glenn, that was also the one where the dividend safety was up at that level?
West Pharmaceutical.
Yeah. So I was really struck by that when I went looking at the amount of cash this company has. Now, I'm always interested to hear about the way Steve talks about the company, and the way, I didn't know he was here since Moses parted the water. Actually, he's a very, I have to say, he's a very young looking guy to be around that long now, but all the same. But the point is that you didn't even have to go and do the looking that I just did in order to find out about the tenacity of that dividend, because all you need to do was just take a look at it right there. So when you put all of that together, when you look at the strength of the earnings per share, when you look at the growth of it, it's boringly profitable and still growing as quickly as that. When you look at the dividend, when you look at the strength of the dividend, and also when you look at the fact that people are spending more there, and I don't know because I haven't been in one, because I haven't been in the States in a while now. But the point is, as Glenn was saying, they're learning more about you all the time as you're going. People are spending more there. They're spending more time there, both online and offline, and they're ultimately delivering more sales there. It's a fantastic pick. Very last thing I'll say is look at the CI. The CI again is spectacular in this. I know I keep coming back to it. The CI here is 1.3. Both actually of Steve's stocks. The renewable energy, the CI was 1.71, and Dollar General is 1.31. Both of them are very, very high. Again, you've got that long-term ability to withstand severe or lengthy price decline. So yeah, I have to say I'm giving it my thumbs up.
All right, Susan, it's on you. But I'm putting it out here that we've been long in the tooth. So I'm just putting that out there. We're gonna still go through your stocks, of course. But I'm just putting that out. We're at just go have at it. We got this. Just go have at it. We're having fun. Just go have at it. All right. Say again.
Have her introduce herself.
Oh, Susan will introduce herself before she comes on. So yes, thank you, Susan.
Thank you. Thank you very much indeed. Well, my name is Susan Hayes-Cullerton, and as Glenn kindly introduced me earlier, I am the Managing Director of Europe. And what I am going to be doing is I am going to be taking you through 3 stocks today that I have come up with from a range of different insights. They're going to be quite different actually to what you've heard already. And I am going to bring that in from a couple of different things that we have been working on in Europe. I always tend to bring a European and a broadly European focus and a little twist of economics, as well as telling you the type of investor that I am, which is what I need to do now. And that is that I personally look for high dividends. I look for long-term investments, and I do like to sell options, particularly to generate my income, generate income through puts, through short puts, for example, through covered calls, etc. So on that note, I am going to get right into this, and I'm going to take you through the first one of the stocks that I'm going to show you. So if I could ask you please to pull up the watch list again there, Glenn, and I'm going to ask you to please pull up Poggi Enterprises. Okay. Now, interesting what that term actually means. The name of the company, it's actually called, it's relating to the idea of being at the apex. It's an architectural services firm. And here is how I came up with it. I basically built a search in Unisearch, right? And I said what I wanted was, and I'm really picky here, I said that I wanted stocks where I was going to get some really good RS. I wanted high RV, I wanted high RT, I wanted a good growth rate, I wanted a low PE ratio, I wanted the lot. So in particular, I am going to take you through one step by step, and then I'm going to hand it over to the guys, just like they've done with me, to take you through how this works. So first of all, in terms of the sector, as I mentioned, it's in building services. It's 90% of its revenues come from their architectural glass framing systems and installation services business. You might just pull up value and relative to price. Yep, okay, you can see that there. So as you can see there, the value is currently 28.89, and in comparison, the price is 23.15. So when I looked at that, I was conscious, of course, that it is an undervalued stock, which is what I wanted as a long-term investor. Then I went on to see that the RV is at 1.23, which is actually the lowest of the RVs that you've heard so far today. But you know, stick with me now, and you'll see where I'm going with this. The relative timing is pretty good. It's a 1.34, and it's been hanging on there for the past while. But in particular, if you could just look at both the growth rate, look at GRT and the PE ratio together. Okay, so if you look at the growth rate and the PE ratio together, the growth rate right now is 8%, and the PE ratio is just 9.08. And this is usually, it's difficult to find the two together, where you can find almost double-digit growing stock, as well as a stock that has got a low PE ratio as well at the same time. Now, I thought in my naivety, I thought I would be the one to have the lowest GPE ratio here today, and I wasn't, because Glenn blew me out of the water when he brought up West Farm. That's why I really had to mention it to you earlier. So GPE is when you look at the growth rate and you divide it by the PE ratio. So that means that you're focusing on fast growing stocks that also have got a good valuation as well. Now, that's not the key reason though why I'm bringing this stock up to you, is that if you go over, let's actually put this on a graph now instead. I think that would be a better idea. Okay. So if you take a look at this stock on a graph, and now if you pull up the dividend yield is distinct to the dividend. Yeah, so if you just pull up the dividend yield there, that would be great. The dividend yield of this stock it actually just announced today that it is carrying through, its dividend is going ahead today, is 3.22%, which is the highest first of all, of my three stocks, but of all the stocks that you've heard so far today. So this really is a stock where it's interesting when you look into this segment and what's driving it and so on. It's a stock where its sales actually fell less than its profit. In other words, it's making better use of its capital, but particularly what really brings me to the stock is the dividend yield at 3.22%. It's very, very high. It is about 3 times. Actually, you know what? Would it be okay? Could we just go back to the watch list and pull up the full stock analysis report on this? That'd be okay, Glenn? Thank you. And I just want to draw your attention to one key point. If you just come down to the dividend yield, just compare the dividend yield to the average of the VectorVest database. Next one, there we go. Look at that. So the dividend yield of this is 3.22%, which is almost 3 times that of the average stock in the VectorVest database. And that was particularly what drew me to this. So when I put all of this together onto a watch list, this is the one that came out tops, and I felt that it was worth sharing with you. Over to you guys. What do you think?
Let's go back to the graphs. The stock, as I see it right now, trading in a little bit of a channel if I had support and resistance. From the perspective of that, I would wait and look for the stock to break out of this level of congestion before I pull the trigger on it. Catches my attention that earnings is falling on it, and you know, Steve and I have been, and we always do, talk about earnings is the engine that drives the stock's price higher. But that dividend yield, knowing that the stock does pay a dividend, more of a possibly of a value play, a longer term play, I could wait out even if I own the stock moving sideways, paying that dividend, good dividend, probably good dividend safety as well. If I go to add parameter, dividends, crud. Dividend safety, I got 61. It's above 50. I like that. The earnings growth rate is falling, but I think that there's enough behind it that, again, while being in that level of a channel, breaking out of it, I think I like it from that perspective. It's been a little choppy back and forth between buy, hold, and sell, but that's what I'm looking for. I break out of it, that little bit of a sideways move. Steve?
Give me a little more history. I'm just curious on something real quick. Give me a little bit longer look back.
Let's give you just, when we pull it?
Maybe another, just curious.
Okay.
All right, cool. Yeah, so go back to your 1 year. All right, so I like the pick from a dividend standpoint.
Right.
Yeah, and Susan's quite fond of her dividends, I know. From a dividend standpoint and also from a price standpoint, in that I still feel you've got some upside here. You're still on the back of some really dramatic pull down from the COVID collapse. So I like it from those two perspectives. I think you're getting a real good price offering at this level, and I think that you're getting a quality dividend as an added benefit, really. And then if you're well versed in options as she is, she's probably selling puts or something of that nature to generate even more income, would be my guess, which would give you overall a very nice take, assuming reasonably good option activity. So from a money generating standpoint, in other words, dividend plus option income, I like the pick.
All right.
Back to you, Susan.
Back to me. Okay, perfect. Thank you both for that indeed. And I think just one other point to mention on this stock actually is that it had to move away from servicing high-rise buildings for extremely obvious reasons, and it's now diversifying the way in which it's working. So I'll be interested to see the way in which this goes. So my next one is Royal Caribbean. And I particularly am interested in this arising from the guest that I had on Fantastic Female Fridays last week. And at the very top of today's show, Andrea posted in, thanks a million, Andrea, for that. She just posted in how she really enjoyed the insights that the CEO of Tour America here in Ireland shared. And during that conversation, Mary pointed out that her sense of the market is that we are moving into an environment where corporate travel will be hit the worst. short haul travel will be hit or will return the quickest, and then we would be following through to long term. But when we actually took a look at cruising, that has a whole different ballgame. Now, I've written about Royal Caribbean before in my views because I have been a customer, and I think it is, the business model is absolutely amazing. And just today, there was a breaking news story to say that the industry body that represents all of I'll tell you exactly what it is now, the Cruise Lines International Association, they have committed to testing everybody for coronavirus before they come on ship, before they come on board. So actually, a cruise in the very, very soon, very short-term future is probably going to be one of the safest places to be. And secondly, there is currently tests running in airports around the world where there will be testing before you can board a plane. So when we actually take into consideration all of those points of view, we are potentially looking at a significant amount of pent-up demand. And I'd say if I was to run a poll in the audience, whatever about corporate travel, I think everybody would love to go on holidays in the same way that they used to before. So from that point of view, I do think that there is a lot of merit in this. However, this is the first time today that you're going to hear about a stock with negative earnings. So as you can see there, we have a negative growth rate of 10%. Now, I ordinarily would not at all look at a stock like this. However, I think that this is something where an awful lot of the market has just thrown in the towel. And on the other hand, when we actually look at the RT, we can see that there is, and if we just pull up a graph on that as well, Glenn, I think that would be great. If we pull up the RT on Royal Caribbean, you can see there is that there is an underlying trend of growth in the direction the direction dynamics and magnitude of that stock. Yeah, that's great. Thank you very much. So as you can see, it's broken over 1. Now, I ran an options trade on Carnival back in June, and I got really juicy premiums on it. So therefore, I decided, what if I was to do the same again on Royal Caribbean? So Steve probably knew this was coming here at some stage. Now, I don't know, can we pull up Options Analyzer, Glenn? Is that possible? I
don't know if we have it here.
I don't think we have it installed yet.
Okay, that's fine. So what I'm going to do is I'm just going to tell you where the prices are at the moment. So what I did was that I took a look at, right, so for just back, the graph there is perfect. So what I did was I took a look at 3 things. I took a look at doing an out of the money option, first of all. So imagine if you sold an out of the money put on this stock, right? So currently the price is exactly 67.80, right? So if you were to sell an out of the money, and I mean well out of the money, at $60, the premium right now is $3.56 for that strike in January 2021. That means you would make a return of 5.53% on a stock that is as far out of the money as that. Now, what I did was that then I looked forward and I annualized that figure, and that is a premium of 20% on an annualized basis on Royal Caribbean, whereby we can see that their momentum is rising, where we are dealing with pent-up demand, and also where you are looking at a company that has really deep pockets and is probably one of the largest, it's not the biggest cruise company in the world, but certainly is one that has got an awful lot of tenacity. So then I thought, well, imagine if we went the other way then, right? Imagine if we went in the money. How about if we went in the money, what would happen then? So I looked at a strike of $70 and I generated a premium, just to go back a moment, a strike price of $70 to expire in February 2021. And what I did was that I took a look at how that would work out, and I saw that the return on that was going to be 15% if the strike price was at $70, which means that it's slightly, in the money, and then that works out at an annualized rate of 55%. Now, if I'm wrong, if I'm still wrong, I could still be generating very significant premiums where I would be hitting at where ultimately the price that I would end up taking on the stock, taking into consideration my premium, is much lower than anything that we've seen since May 2020. So I would consider this quite a risk-adjusted transaction. I would also consider it to be, as you can see there, the stock has pretty much trebled since its lowest point. I think that it's a company that is working really hard to maintain a very loyal customer base. It's got an amazing business model. Obviously, it doesn't have a dividend. It is totally opposite to everything else we've said. It's the first time of my 3, it's the one that is not defensive. Instead, of course, it is cyclical. Somebody, by the way, I saw asking on chat, asking what anti-cyclical was. So anti-cyclical is when you go against the economy. So in this particular case, in my view, this is a really juicy option potential, and one that could, over the long term, from an income point of view, be one that just keeps on giving.
Couple of things. I think this is like the other trade, more from an options basis, but I think this is also a psychological trade. Even though testing may be done, how likely are people really willing to get on a boat with a whole bunch of people, even if you, how about this? I pay for a boat. You tell me I got a fever and you send me home, I'm gonna be ticked. I'm be really, you gonna give me my money back? And I don't know that, but they're gonna test to make sure, and I got that. All right, but from a psychological standpoint, are you ready to get back on a boat with a whole bunch of people at this time? Now, a couple things I did see. Coming off of that low, I do have an upward trend on it. So I know that the stock has been beaten up because of COVID. Could that already be built in or baked into the stock? It could be. And could it be on, and it is on the rise. What else catches my attention is that it's also in a little consolidation phase. And let's go see, and Steve is probably going to give me a pattern for that. Is that flag thing?
No, that's a triangle.
That's a triangle. So I see the upward move. I see the solid line of resistance for each time coming off of that low that the stock's price is hit. I see that relative timing is rising. This hurts me. But it makes sense that earnings per share is going down because they haven't been able to make money with the lack of people coming on the boat. So I'm taking both sides of the fence here, and from the perspective of investing, man, I got to see some people getting on these boats. I got to see some boats back out in the water, and when that happens, could this be a good bottom fishing coming off? Could this be a good low buy right now? Possibly, but you got to get past the mental aspect, the psychological aspect of getting back out on the boats. So that's where I sit right now. I do see the momentum building in after the big decline. That's there. That's evident. I don't know where people's heads are at when getting back on the boat just quite yet. And if you're right, I like this level coming up above $76 to break out above and get some follow through. The stock could be definitely up and away in my beautiful balloon. I sang the song. Fifth Dimension, in case you didn't know. All right, Steve?
All right, so, honestly, it's all a matter of objective. What are we trying to accomplish for me, right? So I see tremendous opportunity here in the long term. I see tremendous opportunity in the long term. I think Susan's got it right. I happen to be a little bit biased towards Norwegian, but I'm a Florida boy, so that's more just kind of the cruise line of choice down there. I've been on all the different cruise lines. I actually really love Royal Caribbean, but who cares about all that, right? I think that if you're going to be thinking in terms of what are some great opportunities and things in which I can buy and hold for several years or longer, I think this is one of those opportunities. I also think there's some airlines out there, like a Love Airlines, who's kind of the most cash flush of all the major airlines, those kinds of things. Similar story here with cruise lines. So if I were going to pick one, this would be on the short list for sure. And then, fortunately, Susan and I know options. So here again, knowing
I don't know options?
Well, yes, you do.
Okay.
But
Wow.
yeah. Anyway, so be careful what you ask. So, I think in terms of there's some shorter term opportunity here in selling options, vis-a-vis credit spreads, things of that nature, in utilizing some of the higher low action that's going on in the stock. And by the way, with the triangle, if we draw it a little bit more across the highs, you'd have to do a freehand line. That would give you an idea on when this thing may just eventually start to go potentially ballistic. So no, draw it across the highs. See, is that a straight line, really?
Yeah, that's a straight
If
line.
if it is, that's actually very encouraging. This pattern would be called an ascending triangle, in which the lows in the pattern are incrementally getting higher over time. Susan is right. There is pent-up demand to get back on a cruise. I've got it. And there is pent-up demand to buy this stock. That's what that chart is telling you right now.
Okay.
Back to you, Susan.
Perfect, thank you. Yeah, you both make great points there, and I do think there is pent up demand from talking to people in this area, and we took a look. We certainly did take a look at some stocks last week on Fantastic Female Fridays relating to this. We barely touched on the airlines as well, but as I look at this one, possibly as well I could be biased having been a customer of it, and so on like that. But I will be very interested. But I have looked for ages over the summer to be finding the option opportunities from stocks like that, where basically even if the stock trades in a range for quite some time, where the options will just based on the previous volatility anyway, keep on giving. So that's been my rationale for that, and I appreciate both of your points there immensely. So the last one I'm going to do quite quickly, because I'm aware, and probably because of me, that we're a lot later than you guys usually are, and that's Hack. Now, this is an ETF focusing on cybersecurity. So everyone has been talking about technology this year, and of course, anytime I've been on Trending Thursdays and I've been talking to Glenn about what's been happening with the NASDAQ and so on like that, we have all been talking about technology. So what I wanted to do was find a niche within it. So in here, I found Hack, which is one of the better performing cybersecurity ETFs. As you know, when it comes to looking at an ETF on VectorVest, or indeed at all, we can't look at RV and RS, but we certainly can look at RT. Just to give you a tiny little bit of background to this, the expense ratio is pretty high at 0.6%, but it's because of its niche. It has got a small company tilt, small cap tilt. It's also 78% based in the US, and then outside of there. And the spending on cybersecurity has multiplied by 35 in the past 13 years. So if we just get in now and we just take a look at a couple of things to do with the stock. Number one is that I just want to take you to the RT and the CI and the dividend yield. So if we could just pull up all of those on a graph, that would be great.
Oh, okay.
And thank you. So the RT, yeah. RT, yeah. RT, CI. Sorry, I keep doing this to you. Apologies. I'm pretty predictable. These three are what I look at every single time. Yeah. So RT and the dividend yield as well. The DY. Yeah, DY. Okay. Perfect. Yeah, thank you. So in the case you can see here for the dividend yield within this is 1.32%, which again, as you know, now I did look at the options on this, but while it's actually, there's quite a lot of volume for quite a niche area of the market, it wasn't offering anywhere close to the options that I've mentioned earlier on. And I wouldn't expect it to, since you haven't got the same volatility. The CI is above 1, it's at 1.15, so as you can see, we've got some long-term ability there to withstand severe and lengthy price declines. And then also, as you can see there, the RT is now moving, it's been moving higher. Like, I was wondering whether to do some stocks like Zoom and so on like that have really been thriving in the technology area over the last while. Looking at Slack, looking at various other different companies, but you know what, they all need the same thing. They all need the security underpinning them, and that was my reason for choosing this particular ETF. I think it's one to watch.
Over the last year, I like it. I'm actually going to put in the last 3 months. Still higher than it was 3 months ago. Stock's price moving. It got hit, that's fine, but I like, because the CI is above the value of 1. It's going to show the resiliency to keep moving up. In another bullish thing going here, that's a little bit of a shooting star pattern or a gravestone doji without follow through. Stock's price gapped up today, moving up higher. RT is ticking up higher. So from that perspective, I like this and Steve likes these pullback trades. I'm looking at this as a pullback trade. Most recently, over the last 3 months, good level of support. Man, in that zone, thereabouts, even going down to here. But I'm going to use this. Good level of support, take off the last close, bounce off, Stock's price moving. I'd like to see it take out the high, but I'm not going to say not to get into it now because RT is definitely telling me that the stock is back in an uptrend. And if I go back in time, as the RT has been above 1, the stock has been in an uptrend, and that could be the start of it all over again. So I do like the trade, whether it's over the last 8 months, last 1 year, last 3 months. Looking back, the stock is definitely moving from the bottom left to the top right and moving higher. That's what you're looking for. Steve?
Sure. So trader perspective, this is my favorite one of yours, Susan, from the trading perspective. This is a different perspective for me, I guess. So I really like the entry here, actually today, or taking it again tomorrow on a higher open. I think you stand a reasonably good chance. It's just passed through resistance. Yesterday was the acid test for that. It appeared that resistance was going to hold. It did not. This market is convicted to the upside. I like the pick. I like it on the short term especially. I like taking half the trade off at the prior high. So I would consider going all in right now. Half the trade comes off at whatever that high water mark is. Glenn, if you could help. And then let the other half ride.
51.19, good target, as Steve just said, to take half off the
So
table.
that's the trader perspective. The investor, just buy it.
All right. Susan, thank you for your picks, number one. Thank you even more so for your insight, number two. We covered a lot today, and I think that this is one of the first times that we've had this deep, detailed insight. And I think that the people who won out the most were the people that were here in the chat today. So thank you for being here. Steve, thank you for being here. Joey, do you have a winner for the mug?
We did, they posted it in the.
Oh, they posted it in the chat already. Who won the mug?
Yeah, I forget his name, something Cockrell.
All right, well, somebody won the mug. All right, and whoever won, I'm not just,
Aaron Cottrell.
thank you. Aaron Cottrell won the mug. Thank you for all typing in to win the mug. If you look down below this video, you will see your opportunity to purchase the mug as far as merchandise. Don't forget, on the 19th of October, we have our 3-day summit, and my two guests that were here on the panel today will be there presenting as well. Do not forget to subscribe to the channel if you haven't already, especially if you liked it. And if you like the content that we gave today, make sure you hit the like button. And with that, folks,
Trial one more time.
and for the trial, if you are not a subscriber, we are inviting you to take advantage of everything that we've shown here. There's nothing that's, with a trial, you get access to everything that we showed here to be able to do it on your own. It's www.vectorvest.com/YT, Yankee Tango. Click that, 99 cents, take it. We want to see how many of you from the YouTube channel have been moved to at least take a trial, all right? Susan, always glad to have you, and I will have you back soon on Trending Thursday. Always like when you're there. Steve, thank you for being here.
You're welcome. Susan's the best.
Susan is awesome. And Joey, you're okay. Thank you for being here to make sure that we look good. With that, folks, adios, arrivederci, ciao, au revoir,
Bye, Susan.
sayonara, aloha, salam, shalom, namaste, adios to everybody. And I don't know how do you say bye in Irish.
Bye.
Slán.
Slow?
Oh, there it is.
Slán. So you say sláncha when you're going to raise a glass, and then you say slán, which is, that's what it is for goodbye.
Sloan. So there you go. Thank you all for being here. We're out of here.
Bye, Susan.
Bye, Susan.
Bye.